Welcome back. You're watching First Trades right here on ET. Now a bit of recovery attempted, from the carnage we witnessed in the markets yesterday, higher by about 0.25%. But let's bring on board the management of Sunteck Realty. We're going to talk about, of course, the earnings of the company. It looks like a good set of numbers from them because the top line growth has been fantastic at a good 50-odd%, and the profitability as well has almost about doubled from 29 crore rupees to 61.6 crore rupees in the current quarter. Mr. Sumesh Mishra, the President and COO of Business Development and Strategy from Sunteck Realty, joins us now on the show. Mr. Mishra, congratulations. Looks like a great set of numbers for the company. The revenues, while of course it's been a great, a smart growth seen over there. What is it that drove it really? Because the street certainly was expecting you to do fantastic, and you have, delivered. But when it comes to the top line, perhaps the expectation was a bit more. So what is it that drove your Q4 earnings?
Hi, good morning. Thank you very much, for having us on the show. So, just to take you through the set of numbers. So, in terms of top line for this fourth quarter, we clocked a top line of 207 crore rupees, which is a 50% growth. And on the PAT side, we have clocked in 56 crore rupees, which is again a growth of 65%. And if you see the margins, our EBITDA margins, as we continue to maintain one of the highest margins in the industry at 52%, and our PAT margins are also at 27%, which is again an improvement from 24% of corresponding quarter last year. Overall, for the full year also, if you see our top line, we have clocked about 888 crore rupees with a PAT of 213 crore rupees. So we again continue to maintain a healthy PAT margins of 24%. Now, in terms of contribution, if you see, our Goregaon project in Old Shivra District Center, so those are moving up very well. We have been able to clock, good set of numbers irrespective of the market. And if you see our monthly sales and quarterly sales, so for the full year, we clocked, overall approximately 140 plus apartments. So which, contributes, in a way in terms of both the top line as well as the bottom line, and in terms of the cash flows. And the traction has been pretty well, and we are looking forward to, in fact, now launch the Avenue 3 and Avenue 4 as well. So this, the first two phases of Avenue 1 and Avenue 2 in the 7 acres has given us tremendous response, and we look forward to capitalize and maintain this healthy run rate for the next, couple of years as well. So that's how we're looking forward to launch more phases in Goregaon, Old Shivra District Center project. And BKC projects, which have been the cornerstone or the flagship projects for the company, with their completed projects status and more than 100 families now moving into BKC in these three projects, gives us an edge in terms of completed project and getting better margins and better realizations. And if you see, the realizations are moving upwards of 50,000 rupees in these projects as well. So these two destinations in Bandra Kurla Complex and Old Shivra District Center continue to move and help us in terms of clocking both in terms of top line and as well as the operational numbers.
Your numbers suggest, Sumesh, that it's a good time to be in real estate. That may not be true for everybody. Are these sustainable? Do you think the demand environment is strong?
See, so historically, we have seen that, and we have more, we have focused more on the residential developments than commercial in the early stages of the company. So, we are just a 10-year-old company in terms of development portfolio. So our focus has always been on almost, mainly on the residential, and that has helped us to keep the debt levels also low. And what we have seen is now we have completed the entire spectrum of real estate. So we started with the top of the line pyramid in Bandra Kurla Complex, which are big ticket size and ultra luxury. Then we entered into Old Shivra District Center, where the ticket size starts at 1.5 crore and goes up to 3 crore, and which is a very, very healthy and very attractive ticket size. And now with the affordable segment in the western belt of MMR region in Naigaon, we believe that we'll continue to grow at a similar pace and maybe in a faster pace, because even that is a 20, 30 or 35 lakh rupees to 50 lakh rupees ticket size that will complete our entire spectrum of real estate, and also manage the cash flow very well. And as you asked me that whether you'll be able to continue the growth, we are very confident that we'll continue to grow the company similarly for the next 3 to 5 years, depending on whatever we have in hand already, and with negligible level of debts.
It's very promising, and we have actually heard quite a bit. Unfortunately, not yet seen it, but we've heard quite a bit about your BKC project. Looks very exciting. Sumesh, I have a couple of numbers with me. One is your pre-sales numbers, which have increased substantially on a year-on-year as well as on a QOQ basis, and your collections as well have improved by I think about 38% on a year-on-year basis. What levels do you see them head?
So, Bandra Kurla complex, whatever balanced 20-25% inventory is remaining with their completed status and people moving in, because of word of mouth and no GST and no other implication because of the ready status, the confidence of the ultra HNI segment is tremendous in these projects, and that is getting reflected in the numbers. So, as you can see, the pre-sale numbers, we have been able to again, surpass the expectation of in the last quarter. This is primarily on the back of these completed status of these projects. Plus, we have tried to capitalize on this trend, and we are launching 2 commercial projects also in BKC, where work is moving on one of the projects called Suntech Icon, which is at one of the BKC junctions. That is moving very well. So this will continue to add to the presence in BKC as well as capitalizing on the strength of Bandra Kurla complex.
Finally, you're talking about not raising a lot of debt. You are, I believe, still looking at 1,500 crores via debentures and 500 crores via equity issuance?
No, that is just an enabling resolution. So we've just completed a QIP this year where with the promoter infusion we raised about 650 crores. Right now our net worth is 2,630 crores with a net secured borrowing of just 311 crore rupees. So net secured debt is just 311 crores. That gives us a lot of power in terms of the balance sheet strength. This is just a enabling resolution that we have taken in the board meeting just to help us in case we see some tremendous growth opportunities. And as we have capitalized in the past in terms of the distressed assets which have been coming our way. So this is just an our current balance sheet itself gives us the strength of raising money on debt or equity. But right now I think we're in a very, very comfortable position. And this is just an enabling resolution. If in case something comes our way, we would want to capitalize on any other growth opportunity.
All right, Sumesh, thanks so much then on that note for helping us understand what exactly went by in Q4. The fiscal as well looks like a good year for you, and of course, you're given very strong revenue visibility numbers as well for at least the next 3 to 5 years. Revenue sustainability seems to not be a problem at all. Thanks a lot, Sumesh, for that.